Hello again, this is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is October 1st of 2020. Congratulations, we made it. 2020 is one heck of a year, and we've got one quarter left. And let's talk about the October outlook going forward as we think about it here at Blanke Schein Wealth Management, as we're managing our clients' wealth and we get through the investments and sort of the markets themselves, you know, as it relates to everything we have to think about. So what I did is I put down about 10 items that we have on our dashboard that we're going to look into for the October outlook. So let's get right to it. So right here I put our October outlook. You like my little drawing here of a pumpkin. It's pumpkin season, so pumpkin spice is out there. Let's look at it. I put the categories that we're paying attention to, as well as color-coded for positives, negatives, and sort of the uncertainty in between. The good news is that once we get through everything I'm going to discuss in the month of October, we're going to ultimately have a lot more certainty. What markets don't like, and seasonally and traditionally through time, especially going through the October historical analogs of markets, there's a lot of volatility that creeps in. And you add in a layer of uncertainty, which is this election cycle, right? Every 4 years we have it. It's just going to increase the stakes there in terms of uncertainty. So in the uncertainty category, at least as we start October, by the end of October, we'll get closer to some certainty, which is good on all levels, especially as it relates to markets. And the purple, right? So we have the election that's in the middle right here is the unknown. But we are going to have this on our radar. We're going to be discussing this, and that's going to change. If you go back 4 years, even through the history of time, October really moves elections. So we could see the last weeks before the elections, last couple of days before the elections, we will see this story evolve. The good news is every day closer to an outcome is a day of certainty for markets, and that's very well for equity investors. So October, we're looking at the election. We also have another day closer to treatments and vaccines. Like I said before, the entire world is a coordinated effort from science and technology and working towards getting a cure slash sort of treatments and effective, several different trials out there that are in third stages. So that's all positive. And it's a global event. So we're working towards that. And every day is closer towards some sort of certainty of how we live with the virus or how we could hopefully get our hands on this from a medical community standpoint. But that's going to work its way out a little bit better as we get towards the end of October versus where we are today. And then the stimulus right now, you're seeing markets go up and markets go down, even as we film this today, in anticipation of stimulus or sort of disappointment when Congress agrees to disagree. Keep in mind, I've said it several times, don't hold your breath. Even though markets have anticipated Congress passing another stimulus, I don't think that's going to happen. And so we're going to see how it plays out. But at some point in time, maybe post-election, we could see Congress come back in and then do something. But again, don't hold your breath on this one. So that's why I put it in the uncertainty category. But let's go to the negative category, the reopening story. Will there be a resurgence in the month of October of coronavirus sort of shutdown lockdowns? It's happened once before. Will it happen again? That is complete unknown. But what we do know is if we look at earnings and corporate earnings, corporations are reporting right now, big box retailer just reported that their online retail sort of sales have surged well over 150% over the last quarter, if you will. And their in-store sales have declined 12%. So only a 12% decline, sort of quarter over quarter or even year over year, is not bad, especially when the uptick in sort of the digital pull through, if you will. So that digital adoption that we're seeing, again, keep in mind, this is a little fact. I know that clients love this when I talk about this. What we just experienced in this last year is with regards to the digital adoption. We digitally adopted, meaning the workforce and us at home, and even now with the technology that we're doing this filming right now, everyone adopted technology that was technically going to take 5 years to get used to and use technology in terms of your daily life. That got pulled and consolidated into 8 weeks. So 5 years worth of anticipated people getting used to using technology in a different way, in a fashion, just got pulled forward. And that's where I have this huge digital adoption. We've all learned to adopt And sales have started with regards to corporate America. They have shifted and pivoted, those that have had the luxury of doing so. And we're seeing that playing out in earnings with the digital adoption. So even if we do have a reopening and then a shutdown of some sort, corporations or equity markets still can make those sales happen. And we've seen that happen. So hopefully this doesn't happen. But in terms of sales for corporations and earnings, it's still not a huge negative, but it could be sort of a headwind, but definitely something to keep an eye on. And the unemployment picture, again, the unemployment and employment picture, it's going to be persistently negative, right? We've come off of all-time highs of unemployment and all-time lows of employment this last year, but it's going to be persistently negative in terms of stubborn going forward on a go-forward basis. And again, partly we won't know if we're going to have a stimulus to help those that are in need, and all the other factors that are going to play out. But that's still the employment picture. While it's improving, it's going to take some time. So I put that in the negative category, but let's keep an eye on it for the month of October. And here's about 4 or 5 items that we want to basically keep an eye on. Markets are paying attention to, so we are too. Well, number one, first and foremost, what move the markets are earnings. And earnings will come back stronger than expected, stronger than anticipated, exceed expectations. Again, I reported this the other day that the first few companies that are reporting for the third quarter out of the gate are not only beating expectations, but they're crushing it. Double-digit crush to the upside in terms of beating earnings expectations. This is the fundamental thing that keeps the market where it is in terms of valuations as well as pricing it on a go-forward basis. So that's very key, and that's the most important thing to keep our eye on. Right underneath it, October 29th, we have the third quarter GDP report. I'm reporting it's going to be, or I'm predicting, and again, it's my personal opinion, my guess, 30% or higher for the third quarter, just surge in GDP. And I've discussed all the obvious reasons, but I really believe that this is going to be a huge number for this quarter when it's going to be reported in the third quarter here later this month in October. The real estate market is hotter than ever. In fact, we just got another report that real estate is basically heating up faster and quicker than ever before. And finally, markets consolidated in the month of August and September. They test some key technicals. That's still going to play out both on the S&P and the NASDAQ. Some S&P sort of 50-day, 200-day moving averages, some consolidation of coming back, and some rotation within that market. It's all setting up to be healthy, a healthy rotation, healthy consolidation. We could see some retests because the volatility is going to come in for the month of October, which wouldn't be uncommon, but we are seeing that, and the markets have had a quality setup, so I'm putting that in the positive category right now. And then finally, we're going to keep our eye on the Federal Reserve, what they say, what they don't say. What they're talking about interest rates, keep in mind they're going to keep interest rates for a long period of time, a couple of years, as they've basically verbally committed to the market. So we're going to see if any of that language changes. That could move markets for the month of October. And finally, the credit markets, right? The Federal Reserve has the opportunity to positively keep credit markets and the liquidity out there, but we also keep an eye on credit spreads in the highest yielding, the junk markets, high yield junk. Because that's going to let us know if there's any further stress in the economy. So that's sort of a summation of our October outlook, what we're thinking about here at Blanke Schein Wealth Management. But keep in mind, there's a digital adoption that's out there. It's absolutely happening right now. And those are the things that we're keeping an eye on. And, if we see any sort of pullback in the market, there's always going to be high quality companies with right management in the right sort of categories that we're looking at. And those are buyable pullbacks for our clients. So we're going to take advantage of a lot of opportunities for the month of October. I'm certain that we will see some. But thanks for watching. And that's sort of what we're thinking as it relates to as we enter into the month of October of 2020. See you again next time. Thanks for watching.